this is the Ghostsquawk. I don't know if you guys have seen it before, but this is our product that we made in-house. You know, again, my skills are, you know, machine learning and math and stuff like that, hard things like that. So I brought those skills to the table to, you know, to produce this product for you. Okay, so it's something we take a very great pride in, and you know, it's something that we offer for you. So anybody have any ideas why we call it Ghostsquawk? Anybody want to take a guess? You guys are so quiet. All right, I'll tell a story. So you know, when I was developing this thing, I had it running on my Mac, and you know, it was just, we call it Ghostsquawk. First of all, the squawk component means that it reads to you. Okay, so I have it muted, but as these headlines break, it will go ahead and enunciate those headlines for you. Okay, and that's important if you're a trader, because you don't necessarily need to be reading this thing to see where, you know, to see breaking headlines. It'll just read it for you as they break, which is a very useful feature. Okay, so I would leave it on, and you know, sometimes I'd go to bed. You know, when I go to bed, I forget to turn it off, and you know, so of course he'd start speaking the headlines, and my girlfriend at the time was like, she called it the ghost, right? Because I would program from the kitchen, and so it was like the ghost in the kitchen that was saying stuff. And of course, sometimes you know, that was less affectionate than I was like, turn the goddamn ghost off if it would wake us up at 3 in the morning. But most of the time it was an affectionate term. So that's where the origin of that, you know, that name comes from. So what you see here, we see some mathy stuff up here. We'll get to that in a second. But basically we have a timestamp of the headline when it broke. Sometimes it's not always accurate. The time zone, I believe, is GMT, hence why it's not 10 o'clock yet, obviously. So there's still, I won't lie, it's not perfect, but it is more than usable. Okay, still rough around the edges, and we're working on that, but you know, again, more than usable. So for example, the yellow headlines indicate headlines that are important. Now, how do I know a priori what headlines are important? Well, it's because I programmed the AI to understand what is an important headline and what's, I don't want to say unimportant, but it's, you know, not critical. So anything that's in yellow deserves attention. So Brazil sets another record for daily coronavirus deaths. That seems important. Yeah. Google takes smartphone servicing, targeting Chinese apps. Yeah, that seems important as well. And you could pretty much go down the line and see for yourself. If you find one that you disagree with, by all means, you know, send it to us, and I'll take that into account in the learning process, because this AI is constantly learning. It's always learning new things. It's always learning new headlines. We constantly update it so that it keeps up with the latest trends. For example, you know, it wasn't trained, you know, in May off of the coronavirus headlines, right? So we had to retrain that to tell it that, you know, obviously there's a clear reason why we need to train it how to interpret those headlines. So it's a product in constant development. You guys do have it for free for the duration of your program, but after that we will start charging, because, you know, there's a lot of server costs and things that go into this product, and at the present I don't actually make any money from it. I'm just trying to pay for the server costs. We were just starting to talk a little bit about the Ghostsquawk and the headlines it gives. Just as a recap, it's an AI-driven thing. So it tells you what product the headline affects. So this one, API data shows a weekly decline in U.S. crude supplies. So that is definitely an oil-related headline. And it's not doing any kind of magic. This is all AI-driven. It actually learns what headlines affect what product. And it's fairly accurate. I would definitely say it's more than usable at this point, which is pretty good considering we just released it over the weekend, right? So I'm actually quite proud of it. It's doing very well. In addition, we have the important headlines highlighted in yellow. And of course, the source where it came from and the timestamp over here on the side. And of course, if you, these are all links. So if you want to learn more, you can just open it in a new tab or click on it and it'll open that link. A lot of them come from Twitter. So if you guys don't have a Twitter account, I do recommend getting one, just because a lot of trading banter goes on Twitter. And I do my best. If you take a look at the, I guess the accounts are quiet for now, but usually we see a Twitter account or two that it takes the feeds from, because we do draw some of our news sources from Twitter. We get it from RSS feeds, and we get it from scraping websites as well. So that's like the news component. Now we see all this mathy shit up here. So we have a couple different things I'll draw your attention to, and that is all of this concerns risk sentiment. Okay, so risk sentiment is the overall direction where investors are going. All right, and risk sentiment is extraordinarily important in trading. It drives all trading. Okay, and the whole point of this course actually is to show you how that risk sentiment affects your product. Okay, are you trading stocks? Are you trading bonds? Are you trading currencies? And how that risk sentiment affects you, because it will. Okay, so what this is really the kind of flagship product that we have. You know, it's nice that we can identify stocks. It's nice that we can identify important breaking headlines, but there are other products that can do that, and I won't lie to you about it. We just do it a little bit more intelligently, but there are other products that do that. That's not unique. What's unique and that you won't find anywhere else as of now is the risk sentiment indicator. Now, what that means, you have basically two modes of the market, right? You have risk on. Okay, what does that mean? Risk on. Anybody want to take a guess as to what that means? No takers?
It's more volatile?
It can be, yeah. Oops, I have a chat message here. Risk, you trades. Not really risky trades, yes. So that's a very good description, but it's a more fundamental level, right? So when we're in risk on mode, that means that investors feel that they can invest in riskier products in order to get a return. Okay, so if I risk $10 or I risk $100, I don't have to feel that I'm going to lose that money or a significant portion of that. That's what we mean by risk on. Now, what are risky products? Well, risky products are things like oil. They're things like stocks. Okay, typically the stock market is reserved for people, who feel that they can, the market's not going to collapse from under them if they enter a position in a particular stock. Now, on the other hand, we have something called risk off. So if risk on means that I'm going to get my returns from something that's a little bit more on the risky side, what does risk off mean? Well, that's the exact opposite. Okay, so that means that people are going to withdraw their money. Investors are going to withdraw their money from those riskier assets like stocks, and they're going to put it more into what we call safe havens. Okay, safe havens are things like bonds, right? In fact, the U.S. Treasury products are some of widely regarded all over the world as some of the safest financial products you could possibly invest in. And we'll learn about that more when we get into the module on bonds. But basically, when you enter a position in U.S. Treasuries, right, you're dealing with the U.S. government's debt. Okay, so basically, if your investment was to fail, that would mean that the U.S. defaulted on their debt. And of course, anything's likely to happen, and anything's possible, but it's highly unlikely, or at least it's regarded as such, that that's going to happen. So my point is, when we're in risk off mode, investors don't feel that they're going to be safe, all right, and that they're going to get that yield from riskier things like stocks. So they pull their money out and they put it into bonds, or what we call safe haven assets. And there's a list of them, but I use bonds because that's what I like to trade. So this chart that you're looking in front of you right now is basically the driver for your trades of that day. So right now we see that we are in risk on mode, okay? And I'll take a step deeper into that and just go into what we're looking at, okay? So this chart is a histogram. I call it the riskogram, right? Because I'm clever like that. So what we're looking at is a score, okay? So -3 being the most risk off, oh shit, pull your money out, the world's on fire, okay? The most risk averse metric you have, versus +3 on the other spectrum is everybody's popping bottles, having champagne parties on their yachts, whatever, like YOLO. Okay, so most of the time the headlines fall somewhere in between. Very rarely do we have some that are up here. Most of the time they form like a bell curve, right? Now, statistics and math is not required for this course at all, but just understand that if you have some type of average, right, and you take a bunch of measurements of things, they should kind of fall in line with that average. And this is well studied, well proven. They form this kind of bell curve like thing. And a lot of times that's what we see here. Most of the headlines are neutral because, we draw from a lot of different news sources. They're not necessarily, market moving headlines. It might be some asshole is his outlook on stocks for 2020 or something like that. And of course, our algorithm is going to grade it as more of a neutral type of thing. And of course, you do have the breaking headlines. Obviously, that's why we have this product. So the things that fall on either side of that average are going to be those types of things. Right now, what we're looking at is more of a risk on, right? Because we see that bell curve is actually squished over to the right side, right? We have this big, this big bar right here indicating that we have a bunch of risk on articles, okay, which is kind of paradoxical because of all the problems we have in the world, right? We have the riots going on in the US. We have the coronavirus thing that we don't seem to be out of the woods on that one yet. We have trade tensions with China, and then the list goes on, right? But there are reasons why even in environments like that, stocks tend to thrive. This is going to give you a metric on that. So if we just pop on over to, let's take a look at by stocks, I'm actually talking about the what we call the index. Okay, so I'm not talking about a particular stock, I'm talking about a stock index, and that is a conglomerate measurement of the top 500 companies. In this case, the S&P 500, that's what it's called. That's what we commonly trade here. So when I tell you I'm trading stocks, I'm not buying Microsoft or anything like that, although I do that. From a trading aspect, we're talking about this product here, and I'll get into how we trade this product exactly, later on in this lecture. But the point is that we see Ghostsquawk is very risk on, and if we pop on over to the chart, we see that the stock market is actually increasing. So this is a very, very reliable tool that we've been trading with since 2018. And it really hasn't failed us. In fact, it's gotten even better. So this is what I call the riskogram. Again, it gives you a spectrum of where the risk sentiment is in the markets, and it will color code it for you. Okay, so here we have it's colored in green. That means risk on. If it's shifted over to the left, we'll have it colored in red. And of course, when it's forming that nice bell curve that we expect, it's also going to be colored in yellow. And finally, we have it's actually a second metric if you're a real stickler and you want the most data at your hands. This is actually a completely different algorithm So I have one that's classifying this riskogram and another that's going through and tallying the articles one by one. So it tells you how many articles are risk on, how many articles are risk off, and how many are neutral. Now, if you're kind of lost right now, that's okay. It's perfectly reasonable because this is the tool we constantly reference. We're constantly talking about it. So it's kind of like riding a bike. I'm not going to be able to lecture you how to ride a bike in one sitting. It's something you need to take practice with, ask questions about, and use. Okay, so you guys have it at your disposal, so please use it.